Straight up, straight up. All right. What's up? What's up? Should be good. Should be good. All right. So basically, here's what's going on. All right, we have these key levels, right? And this video is not about key levels. It is, but I'm not. This video, I'm not going to talk about how to get key levels, but basically, you know, I guess I'll say a little bit that you're looking for when you go to find key levels. You know, you start on the 1 month, right? You find, you know, your local highs and lows, right? Local highs and lows. So you're looking for exact highs on the monthly, right around local. What I mean by local is around price action right now. So, and then you do the same thing on the 1 week, and then on the daily, and then on the H4, and then on the H1, right? And then you start getting in on the 30 and the 15 and the 5 and all that. You really don't want to mark that up too much. You want to really be careful. You don't want too many key levels. What you want to do is make sure that price action is respecting these key levels. You want to verify the key levels. You want to make sure that they really are what you know, what you need them to be. And the thing about it is, you know, you can see price action respecting these key levels, and that's good. And what you need to do is find out how to get a good entry, and that's what I'm about to show you right now. So basically, you know, you have this key level right here, and this key level right here, and I'm not going to zoom out right now because I've got everything perfectly positioned the way that I want it right here. And this is what I'm going to show you right now. So yeah, so right now, basically, as you can see, so basically, you don't want to get in. You know, I've got these alerts set right here, you know, but really, I'm really basically gonna be setting these right here in the future, actually, because what is all this stuff on my screen? Okay, basically, here's these little alerts here. Now, the thing about these, the only bad thing about these is they only alert while you're on your computer, right? Because, like, I don't know how to set it to where it just activates or runs when you're not on it. Like, I haven't figured out. Like, I gotta see if there's a way. What I may have to do is go on, see if there's some way I can go on like Trading View or something like that on the free plan or something, like set up some alerts on there or something. I gotta figure out a way to set up some alerts so that basically what I need to get an alert on my phone when it gets to these key levels. So anyway, but because you can see, like, basically right here, let me just, oh, don't move, don't move, don't move, stop moving, please. Come on now, come on. But yeah, we want to just see where that candle wick goes, right? So basically, if you, let me see if I can get it closer a little bit, but so we need to be able to see what's going on. We need to be able to see. But anyway, yeah, so basically it's like this. So you don't want to buy, like, below this key level or even at this key level. I mean, almost always, you can look, price will almost always break through the key level and come back, right? And then if you look at, price action candles, right, you can see right here, price comes up, right? It gives you, some stuff. It gives you this little cross right here, which is like a reversal signal, right? And then you get, like, you get this little action here. You get that nice big down candle right there. But you get some price action above that key level right here. So, like right here, for example, is kind of what I'm talking about. So, you get this, right, and you're like, well, when do I get in? Okay, do I get in? And when do I get in? You're like, well, is it going up? Is it going down? And so, what is all this stuff, right? This is where this comes in. So, all this stuff right here is a lot of different things. So this start with this orange and blue right here. This orange and blue is time segmented. No, my bad. This is, come on. It's called the relative vigor index. Relative vigor index. And so what it is basically it's like the idea. I don't even know if I like it. I'm experimenting with it, but is that when this blue goes above this orange is like the signal line, right? So then this is like your action line right here. So when this goes above, it's supposed to be a bull market. As you can see, it was moving up, but it's you know what I'm saying, it's a little laggy, right? So but you can see, yeah, I mean, basically the move is over, right, when it gets to where it's going. But actually, never mind. What am I saying? We're gonna have to look on the bigger time frames. I was thinking it was on a bigger time frame, but anyway, that's what that is, right? So basically, and then this, let's see, this red one, so crowded in here. This red and green one is a stochastic oscillator, which is my favorite indicator of all indicators. I find it to be the least laggy and the most accurate in terms of local price action on each time frame. So basically I have a 1 hour, a 30-minute, a 15-minute, a 5-minute, and a 1 minute, right? And so what I mean by accurate on the local price action is I mean that basically my feed is not doing good right now, but this is an important video, so hopefully it gets good. But anyway, alright, well, hopefully it turns out alright. But yeah, so basically, what I'm watching for, and this is the whole point of this video, I should probably cover that last, but basically the idea though, right, is you can kind of tell what the idea is, right? So this 1 minute, it bounces up and down. So this stochastic oscillator, it moves up and down a lot. A little bit less often on the 5, even less often on the 15, less often on the 30 and the 1 hour. It's not perfect. It doesn't always go straight up and down, as you can see. Like right here, it was going down and it went up. Now it's going back down. Now that particularly happens on the higher time frames a lot, because the higher time frames are pushed by the lower time frames. So the lower time frames, typically you do get a lot of up and down action. But now the thing is too, also the lower time frames, this is where it gets sort of a little bit confusing. The lower time frames can be pushed by the bigger time frames. So you just sometimes, you just never know. But anyway, but what I wanted to show you here was, so the importance of just like all this confluence of all this information and all this data that we have now. You know, I've also got three moving averages on here. I got the 365 moving average, I got the 180 moving average, and I got the 90 moving average, right? You can kind of tell what's going on with that, right? So years, 365 days, half of that is 180 roughly, and then a half of that is 90. So right, so we can tell what's going on with price action, you know, a good bit by, you know, looking at that. So now the important thing here to know is, like, we've got price has been respecting these key levels. Okay. Hopefully this connection gets better, but yeah, there we go. So price has been respecting, I'll say that again, price has been respecting, hopefully you can understand what I'm saying. Price has been respecting these key levels, okay? So let's be clear about that. That is probably the most important thing. If you don't do anything else in Forex, I would say, you know, you got to get your key levels. Got to get your key levels. So there you go. So get your key levels, and then basically you see that price is up here. You can set your alerts, and then so you see that, you know, price. If you look back, you know, at your key levels, you can see that price basically, you know, like, we'll take a look. It almost always goes. It almost always goes above the key level before it comes back down. So we're looking at the key levels of you know, 95 and 24, right? So look back and you know, see if we can see price acting in that area. So see what was it, 95.24, 95.24, and 85.15, 95.24 and 85.15, 95.24, 85.15. Here it is, 95.24, 85.15. Excuse me. So we'll have to look back when price was bouncing in that area. I mean, it didn't stay in that area long, did it, actually? And this is always good to do, is just look back. But right here, so actually price barely touched on this one. So, you know, like I said, it doesn't always, but so you're looking for like your ideal entry, right? So I bet we could look at this area right here. We're on the 5-minute, but we're not gonna look at this right this second. We're gonna go back to our example that I have set up for us to look at. But, you know, like your best entry, I guess it'd be over here. But you know, I mean, you have to be your highest entry. I guess you could say your best entry would be right here, because this is after this consolidation. So the thing about this consolidation is, like, whatever price does after that consolidation is going to be a pretty solid move. So the consolidation acts as like a foundation, right, for price action. So you know, your ideal entry, I guess, would be like after consolidation, because, you know, like, whichever way it goes, it's probably going to stay that way. And so yeah, so yeah, so you can see, I mean, at least for a little while, right, just for you to get your profits. So anyway, 25 or 95.24 and 85.15. So how long was price playing in that range, or was it? We'll go back over here. So what I was going to say about this over here was that even though the price just touched it, you could look at, I bet you could look at the higher time frames, and you could see what I'm about to show you, and it'll probably be exactly the same as. So we'll mark that, and we'll come back to that later on 8/17, 4/15. So anyways, yeah. So let's get back to where we are, where we're looking at. So zoom in. Oh, what am I doing? I'm hitting like wrong buttons. There we go. So now, yeah, so there's no, let's see here, where we at? Right here. 25,607. All right, cool. So basically, what we're looking at, and I'll tell you what the rest of these are. So this, like I told you already, this is this relative vigor index, okay, and then we talked about this being the stochastic oscillator, and you kind of see where I'm going with that. Like basically, when it crosses down on the bigger time frames, that's the whole reason I'm making this video. But we'll talk about that in a second. So. But then, yeah, but I was talking about I got these moving averages, right? So I got these moving averages, and the cool thing about it is, so we're at this key level, and yeah, price went above it. We, like I said, you don't always know what you want to look for is when price starts to turn, right? And so, like that's what I was saying a minute ago. If we lined all these up on that last one I was just showing you, I bet you that you would see the same situation as what we're about to see now. So, but yeah, this is a relative strength index. You can see even it has a little bit of a curve. Starts to go down, down on all these ones. So, that's something to keep an eye on. Also, now this this one, this green right here, is just called time segmented volume. So that is kind of what it sounds like, right? So it's just, you can look up all these different things, but I mean, I don't know that this is a great one. Like it is good, but like what I'm saying is this is like a certain version that was made by somebody on MetaTrader 4. I've seen a better one on, I think it was like TradingView or something like that. So this one's cool. I'm glad I found it, but like I don't think it's as good as some other ones that are out there. So, and then let's see, that dark blue, that's momentum, and then this white is force index. So that's pretty much, you can see what indicators I have right here. So I got the stochastic oscillator, relative strength index, relative vigor index, time segmented volume, force index, momentum. And then accumulation is this one right here, this little skinny one. I haven't figured out like if that's super helpful or not, but volumes is good, very good. Obviously right now it's almost 5 o'clock, so volumes are basically nothing. Volumes pick up, mid-morning around 9 o'clock, right? So that's like when Wall Street opens and all that, right? So, but yeah, I mean, you can keep an eye on accumulation distribution, basically. But like what I've found is like the biggest moves, like everything drops. You know what I'm saying? So right here, basically, it's just a confluence, right? So we have like a key level, right? And it's like, oh man, price is going up above the key level. What's going on? Everything's overbought, right? Everything's overbought on the high time frames, right? You've got, and you could go even more. You could go one up on the H4 if you want to, like, and check that out and see what's going on. Right here. But like, that H4 was at the bottom, right? So I mean, you don't need H4 for a huge move, But yeah, like right here. So H1 is getting close to overbought. Like I said, this one, the higher time frame you go, the less likely it is that it's going to be a high overbought or a low oversold. But when it is, hey, pay attention because there's going to be a huge move. And let's just look at that real quick, because I want to see basically. So right here, we're looking at like this drop, right? So this drop was like, it was basically 500 pips, right? I mean that's that move. You can see that's that move, and that's a good move. I mean that's a good. You need to catch those moves. Now obviously if you were on point over here, you can see, man, look at this. Wow. Super overbought right here, right? So looking for a big move to the downside, right? And you can see on the H4 we have this, you know, and like I said, this has gotten pulled down permanently in real time. You know, it might not be looking like this. Actually, so right now, matter of fact, actually right where we're at right now, we ought to be looking for some kind of big buy, right? Some kind of big up move, right? But the only problem with that right now is on the H1, we're up high, right? So let's see, when was this? This was 1900. Come over here. Where are we at now? 1900 is where we're at. It's like right here. It's not showing it, but it's basically like right there. So, you know, I'm sure a lot of people bought that and was expecting some big move, but there will be one, right? But you have to have a confluence of everything. See, that's getting back into position, but this H1, it needs to pull down, right? So, I mean, but look, this is down here, and it goes up here, but nothing happens. I mean, it's just consolidation. So, but you know, you have this huge move right here. Look at this, thousand pips. That's not that big for gold. That's really not. But you can see, like, basically what happens. It's up high on the H. Actually, that is the move we're looking at. What am I saying? That is the move we're looking at. We are looking at that. That's it. That's it. Yeah, 1,000 pips. That's why we're looking at it. Okay. What am I saying? I'm trying to keep track. 1,000 pips. Yeah. That's supposed to be like the ideal entry right there. But I marked that on the 1 minute. So, but let's see what that looks like. See, like on the H4, it was way down low. So, but no. Why does it move? Why does it move? Unless there's something else over here. Okay, that's what that was. That's something else. That's a different time and day. That's 8:24. 8:24. Now what I need to do is go back and look at that, because that's an even bigger signal, right? So then you start looking on your daily time frames. That's 10,000 pips right there. So 10,000 pips. 10,000 pips. More than that even. So from 8.4 to 8.9, that is a lot. Actually, it's more than it's probably started, I guess, over here, but you get that massive pullback. That's ridiculous, crazyless. But anyways, so most people, if they were looking for it, what would have probably happened was they would have probably got in right when it started looking good, right around here, boom. And then smart people, somebody just grabbed a bunch of liquidity right here. They figured, all right, everybody's getting in for a sell, boom. Knock out all that liquidity, go ahead, get my paper, bam. So that's something too also to look out for. So maybe get in after the liquidity grab if you really want to be smart. But yeah, I mean, that's just gonna come with observation, time, experience, everything like that. That's a rough ride. right there. I'll tell you. I mean, how much was your? Let's just say you got in right there at the close of that red candle to the left. I mean, your stop loss would have had to been 2,500 just so you didn't get taken out. But you know, that's reasonable, because if you take profits, God, I don't know how you'd even know like that you was trying to go down here. You know what I mean? But that's not a bad risk reward. But how would you know? Anyway, I'm way off track. Down the rabbit hole. All right, let's check my connection. Over here. Now, back to what we were saying. Okay. So anyway, now that you know what everything is, but yeah, so we're checking our moving averages on all the time frames. Oh man, what is happening? Checking our moving averages, right? And you can obviously zoom out and check it, but you really need to. But anyway, I'm just saying, keep that in mind. And then basically, yeah, so you're above the key level, everything's overbought. Everything starts to come down right here. First on the 1 minute, boom, all that's coming down, boom. Chain reaction like dominoes effect. Now the 5 minute starts to come down, boom. Now you see the 15 minutes starting to go ahead and come down. Next thing you know, the 30 minutes coming down, bam. Now the market's really cooking, moving fast. Bam, now the 1 hour is now in your favor now. Okay. So now, obviously these are oscillators, right? Oscillators. They go up and down, up and down, up and down. So this one goes up and down at a different rate than this one. And then this one goes up and down at a different rate than this one, right? 1 minute, 5 minute, 15 minute, 30 minutes. So you have to, it's like, whatever. For every 2 oscillations of this, you get, or 3 oscillations of this, you get 1 oscillation of this, right? So the 1 minute and the 5 minute. And then for every, 2 or 3 oscillations of the 5 minute, you get an oscillation of the 15 minute, and et cetera, et cetera. So you just have to, get used to that. And you have to just kind of, get used to that, right? And just sort of, be like, all right. You can get, what I like to do is, say I want to go in on say I want to get in certain amount of lots, right? So say you were going in on say you were going in on a 1 lot or something like that, right? And but you would want to buy 0.1 and then look for a better entry, right, or whatever like that. You might know you can get your perfect entry. So you go in on a 0.5. Well, the thing about it is there's going to be a pullback to that level, most likely. Yeah, I mean, for me, but I mean, I'm not trying to tell you what to do, because you can do because I don't want to be responsible. But I'm just saying, from my experience, if I go in on my full position, it's and then bam, it goes up, and then now I'm like, damn, I could have gotten in a better position. So I like to spread them out, you know what I mean? And even if it goes down and doesn't come back up above that, it's fine, I know I'm going to get some entry close, even if it's below, and that's okay too. But the chance that what sucks worse than that, that's not even that bad. What sucks worse than that is when it goes above your sell, and then you're in negative, so you're losing what you call margin, right? And then so you have less buying power, selling power, and then basically it's like that. And then But yeah, so you have less selling power, and then basically um, and then and so you can't get uh, back into that position. So, but the thing about it is that, like I say, you get a great position on like a percentage of your lot size, right? A fraction of your lot size. You get in at a great price, right? Like you, let's say you get the best entry, but you don't get your full entry, right? So let's say you get a 0.25 or a 0.25 lot instead of a 1 lot, right? So you go, but you get the best entry, right? So it's the absolute top, boom. So you get that. You didn't get your full position, but that's okay, because when it comes down, pulls back up below that first sell, then you have more margin, more selling power, right? So you can go ahead and feel better about putting in that additional sales, right, and stuff like that. So anyway, but obviously your stop loss is going to be a little bit bigger. But you just look for some consolidation on the way down and move your stop loss, and as it continues going down, and you'll be good. So anyways, this is kind of the gist of what I'm saying, though, is like basically you can see, like I said, everything's overbought, and it just starts to go down. And you know what I'm saying? Like I said, these are going to oscillate. So that's what's going to happen. I mean, these are going to oscillate, and and it's going to get, it could get, most likely, a lot of times it'll look sketchy. Like sometimes, you'll be like, oh damn, it's pulling back. Say you're targeting 1,000 pips, and then it pulls back 500 pips, which is normal, and then continues to the downside, right? So you got to figure out what you're trying to do, what your goals are. You want to get those 500 pips and wait for a pullback. You know what I'm saying? What if you take your profit at 500 pips and it keeps going 500 more pips? Well, what are you going to do? You're going to beat yourself up. The thing about it is, though, when it gets into the middle of a key level area, right? So say you take your profit right here, because you're like, damn, it could pull back, and I don't really got time for that. I just want to take my 500 pips and go home. But then you see that it keeps going, and it's it, man. You're done. Go home, because as soon as you go ahead and try to sell in the middle of this zone right here, guess what? It's most likely going to do. It's going to most likely pull back up, and it's just going to blow everything all to hell. So the only thing that you should ever do, the only time you should ever buy, period, at all, I don't care what you say, is at a freaking key level. That's it. Okay? I'm just curious. I want to see where price action actually is right now. It's not moving, so I got that, but yeah, so it's not even close to a key level right now. You know what I'm saying? But if, I don't know if I give you an example, but yeah, let's say you got, let's say right here, you went in for a buy. You're like, damn. Say you got in. Let's say you got a really good entry. You're like, damn, 500 pips, boy, I'll take that. I'll go home. You take, what do you take? 750 pips? Oh, hell yeah. That's good. But you see this pullback, you're like, damn. That's a nice pullback. Oh, it's starting to go back. Oh man, if you try to get in right here, come back and look in a few hours. You think, oh man, I get another 500 pips. Man, that's greedy, and you're gonna get eaten, because only thing you can really trust is all this confluence of everything going in your direction at the same time. So your moving averages are lined up for you. You know, because you're looking for uh, you got exponential moving averages, basically. So you got is that our spot right there? I guess so. How many pips was that? Yeah, it's 1,000, 1,200. But yeah, you know, you're looking at your moving averages. So you got 365, 180, 90. So I mean, you're looking for a sell. Period. You're looking for a sell. You know, so perfect. You know, right here at this key level, you got stochastic oscillator starting to go down. You know, even if you got a late entry, man, like even if you got like a late entry, right here, boom, still 1,000 pips. In from 1,600 to 1,700, so like an hour and a half. You flip your account in an hour and a half right there. You could more than flip it if you, depending on how much leverage you're using and all that. So yeah, I don't know why. I just enjoy making these videos. I guess it makes me feel important. It makes me feel like I know what I'm talking about. You know, you know. And that's what everybody wants. Everybody just wants to feel important. All right. Like I said, they're mostly for myself, but yeah. So there you go. So I mean, like, you don't have to like sit there and like basically. One of the mistakes that I made was thinking that, oh, the sunshine feels good on my feet. I'm about to go to the pool. Yes, sir. Yes, sir. But basically, one of the mistakes I made was thinking that I could just come in the market, you know, any time of day and do work, you know, and it's just not the way it works. Like, you set your alerts to your phone at your key levels. You know, if you already have your key levels, you can go to, like, I'm gonna check a trading view and see. Maybe I just go in there and set up the same key levels I already found on here. But sometimes I like to take another look. Sometimes I see some things I didn't see. But if you know what I'm saying, it's just time invested, right? And so if it's working, don't. If it ain't broke, don't fix it. You know. So basically, you know, you could do that. You could go and plug in these key levels onto some place you could get your alerts, and then go get that and verify that on that platform, you know, which would be good. Give you some double confirmation on your key levels that your key levels are good. But yeah. So basically, that's pretty much it. Like, you go out and live your life and do what you want to do, and then when you get these alerts on your phone, that's when it's time to roll. It's time to move. It's time to get back home and go ahead and jump on your phone or whatever, and you know, hopefully you got your laptop with you wherever you are, and you can go ahead and get that get those 1,000 pips, you know. So there you go. So that's pretty much it. So, you know, I mean, I've tried basically a lot of things. I was gonna say everything, but this seems to be the best way, if not the only way. I mean, obviously you can make money, but what I'm saying is the market is extremely, a lot of time, I would say, extremely unpredictable. But the thing about gold is it moves so fast. If you're wrong, like, you're dead wrong. I mean, in other words, I mean, if you're wrong, it's gonna take you out. Like, you know what I mean? If you get in between a key level, you're basically done. Like, I mean, it's just a matter of time. I mean, you can play, you know, you can play these in the middle of a key key levels in the middle of a range, as they say. You know, you can play it a little bit, right? You can play it. Sometimes you can catch a little quick profit. You can catch a little quick, you know, 100 pips or something like that. If that's what you want to do, you want to go in on a one lot, and when all these line up, wherever, whenever, like, you know what I'm saying? Basically, like, you know, basically, you could come in at any time and say, all right, these are all lined up. I'm gonna go ahead and take some quick profits, but you don't have a clear place to say, okay, well, I know, you know, price is most likely going to come back down to here, right? But you also got to keep your eyes on the market. It's not like you can't. It's not like you can just put in a trade and then just like walk away and do whatever. Like, you know, you need to keep an eye on it. Move, you know, look for opportunities to move your stop loss. You know, look for opportunities that you might want to take profit and call it a day. You know, because it's no guarantee that necessarily price is gonna hit that key level. You know, because it can do it at once. Now, the other thing also used too is these right here, which the guy his name. Let's see. Oh shit. Oh I messed that up. Hold on, I'll fix it. I'll show you how to do it if you have a Mac. Basically, but so it's mataf.net. That's what it is, mataf.net. And you just go there, and basically, you know, you can find these. You can find these. So, and then that's how you do that. So, but yeah, it's just this little website right here, mataf, basically, and then find gold. I googled it or something, but yeah, I mean, that's basically what it is. It just has these little charts, commodities over here, gold. So you can go in here. Let's see. This is the first time I've been to just the .net. I just found this chart straight out of Brooklyn. Isn't that a Beastie Boys song or something? Straight out of Brooklyn. No Sleep Till Brooklyn. Straight out of Compton. I'm getting them too confused. But I don't know. Whatever. It's right here, and then I don't know how you do it. You figure it out. Copy. Just go to forget that. Go to mataf.net/en/forex/tools/currency-index, and there you go. Full screen. Pop it out. Now you got a very, very nice double chart situation. So that's how you do that. So when you get ready to put the things in there, you hold down that, and it'll go to a split screen, and then you just put them in. So, all right, cool. I'm gonna get out of here. But that's be my advice. Just get your alerts at these key levels and look for this multi-time frame confluence of like, yeah, okay, it looks good everywhere. It looks good. Make sure everything's overbought. Make sure, you know, this is moving. You know, look for your entry. Take your entry. Set your stop loss. The good thing about, you know, getting in way up here, obviously, you know, you got a small risk to reward. I mean, look, if you get in right here, and this is the 1,000 pip move right here. So, you know, if you get in up here, bro, you know, everything's looking good. So You put your stop loss right here. Boom. I mean, that's like a 10x. You're risking like whatever, you know, $10 to make 100. Maybe less than that. And so that's how you go. Best way. Best way. So that's all I got. I'm getting a headache. I need to go eat something. So where was that? This is 16. Yeah. Now this move was 825 to 1600 hours. Okay. That was Wednesday, which is today. 1600 hours, which is 9 a.m. 9 a.m. 9:07 exactly. 9:07 a.m. on a Wednesday. Now tomorrow's gonna be a huge day because there's a big announcement for gold. So stay tuned on that. All right, cool. I'm gonna stop right there. All right, cool. See ya. Thanks for watching.